Anthropic just surveyed 80,508 AI users across 159 countries. The number one fear people have about AI isn't job loss, it's unreliability. More than a quarter of users are afraid the technology will be wrong and they won't catch it. The fear is valid, but I'm going to argue that it's aimed at the wrong target. You see, here's the thing. You've been managing failure modes in your staff for your entire career. You probably don't call them failure modes. You just call them Tuesday. A bookkeeper codes every Home Depot transaction to repairs and maintenance because that's where they always go. One time, that works. 2 times, that works. 20 times, that works. But then comes the $4,200 table saw. Your bookkeeper was right 95% of the time. The 5% that should have triggered a question. That 5% got swept along with the routine. A senior accountant reviews a work paper, sees a number that looks right and signs off without tracing it back. 3 weeks later, during partner review, you find out it was wrong the whole time. A client sends an email saying, just put it in miscellaneous, and the bookkeeper puts it in miscellaneous, even though the transaction clearly belongs somewhere specific. We tell our staff, don't let the client do your job, and they nod. And the next email arrives, and the same thing happens again. An exception report flags a $47 reimbursement because the description says penalty. The exact same thing happens with a $15,000 payment to a vendor with the same address as the client's spouse. One gets flagged, one sails through. These aren't new failure modes. They're not unique to AI. They're the ones you've trained on, built review layers around, and accepted as part of running a practice. Pattern matching that stops looking. Reasoning that doesn't follow through. External input that overrides professional judgment. Exception flags that catch the wrong things. 80,000 people are right to care about reliability. But they're not afraid of something new. They're afraid of something every practice owner in the world has managed for decades just in their human staff. This question isn't whether AI makes these mistakes. It's whether you can fix them and whether the fixes stick. See, here's where AI gets different. When you correct a human, the correction is fragile. You explain why the coding was wrong, they nod and understand. 2 weeks later, the same error shows up in a different client. The training is slow, it's inconsistent, and it walks out the door when that person leaves and you have to start again. With AI, a correction can be permanent. You encode one rule. This client capitalizes anything over $2,500. Always check for an invoice on Home Depot transactions above that threshold. That rule applies to every transaction, for every relevant client. Forever. One correction, permanent improvement. You see, that's context engineering. It's encoding the edge case rules experienced practitioners carry in their heads so that every correction compounds into institutional knowledge. The problem is that most AI embedded in accounting platforms doesn't show you the reasoning. A transaction gets categorized. You see the result. If it's wrong, you correct it. But you don't know why it's wrong. You can't prevent the same error tomorrow. It's a black box. It's no different from the bookkeeper who says, I don't know, it just seemed right to me. So this is a call to every software vendor building AI into accounting tools. Please show the work. The ability to see, correct, and encode decisions is what separates AI that gets smarter from AI that just gets faster. If you can't see how a decision was made, you can't train the system. If you can't train it, you're stuck managing the same failure modes just at higher volume. Now I'm going to give you a concrete example. There's a medical AI that recently identified respiratory failure in its own reasoning. Then it told the patient to schedule a routine appointment. It directed patients away from the ER 52% of the time in cases that physicians unanimously classified as emergencies. Now, the aggregate accuracy number was fine, but the errors concentrated where they mattered most. That's what happens when you can't see the reasoning and correct it. The fix isn't refusing to use AI because it makes mistakes. It's demanding tools that let your corrections compound instead of evaporate. So stop comparing AI to perfection. Nobody holds your staff to that standard. Compare AI to the actual humans doing work right now. Your best bookkeeper makes the same mistake twice because the correction didn't transfer. AI makes the same mistake once because the correction becomes a permanent rule. Your senior can't explain why they signed off without checking. AI can show you exactly where the reasoning stopped. Your staff member takes a new job and their institutional knowledge walks out with them. AI's institutional knowledge lives in the system. 80,000 people are right to care about reliability, and you should too. But the comparison that matters is not AI versus perfection, it's AI versus the humans you already trust with this work. The failure modes aren't new. The ability to fix them is. Now, there's additional content for newsletter subscribers on our blog. The link is in the description. We've put together 5 pointed questions you can ask every AI vendor about how much visibility they're giving you into their reasoning. You can use these questions on a demo call or use them to evaluate any AI workflow you're building internally. So go to theaiaccountant.ai and sign up for our newsletter if you haven't already. And if you're ready to talk about what AI adoption looks like in your firm, book a consultation with me at theaiaccountant.ai/consultation. We'll see you tomorrow.